A practical way to save yourself the stress of trading with confusion. Here, this is the candle that many people are confused about, and this one too is another candle that people are very afraid of. When you see something like this, what actually this market is going to be is what you don't know. You know, sometimes there is a fear of what the market may become. Like if you see something like this in your moving average, you see something like this in your moving average, which at the process of that, the same market you have before can return back to be something that may not give you joy, that what you expected is not what you are seeing. So this very one you are seeing here now is forming something that the cross, you were told that once you see three bottoms, you see a candle that have this three bottom like this, you know, it becomes a very big problem to people to understand what the market may look like, because it have crossed this line and at the end of it the market is still showing uptrend like this. Do you see that? So this video, I want to make it clear so that you will be able to pick out some point, and it's going to help you to be accurate in your analysis. All right, so stay tuned to this video. If you see this crossing in your videos, in your charts, don't know that something huge is coming, please stay tuned and don't skip this video, because you never can tell where the information you need may be found. All right, thank you. One thing people should know is that in a body of candle like this, it represents something. Why do this end up as a engulfing candle? This ended up as an engulfing candle and is a bearish candle. So as a bearish candle it has something that showcases the strength of the market. And what is that? It is the average. This place is the weak candle. From here to this place is the weak candle. So as you see this as a weak candle, it represents something. What it simply means is that the presence of sellers in this place, the sellers that push this market to this place. Please remember that anytime the market is going in this direction, remember that we say that the market is selling. Please get that. So anytime the market is going up like this, we'll say that market is buying, which means the bullish movement. Here is the bearish movement. Now, as this market keeps going to this very direction, this market pushed down to this place. Why it was pushing down? This candle, which is buyers, came at the process, which means the process of the time frame. It was the time frame that makes this thing to be a weak candle. What does that mean? At the hour, like let's just take it like H1. In H1 like this, the market was moving to a bearish candle, but since this candle has opened up in 1 hour time frame, there is nothing that will stop this candle from closing below 1 hour time. Nothing will stop this very candle to maybe stop between 15 minutes time or 5 minutes time. That is why we'll have 5 minutes time frame, 1 minute time frame, 15 minutes, 20, 30. Remember that before 15 there was 10, there was 11, there was 12, there was 13. So each time this market opened as H1, and why the 1 hour time was going on like this, why the 1 hour time was moving up in this direction, take it as this was going up in this direction. Now a candle, this very market interrupted maybe between 15 minutes time, get that now. This candle now opened up as a bearish and starts going down to this direction. Now in 15 minutes time, the market now, which is the buyers, which is this one, they interrupted. They wanted to take over the market. So since sellers have gained all those things down to this place, please get that. Now the market started, the sellers, the buyers came in and started pushing those things up. So all those places that they have eaten, will see them as a weak, because if these buyers are strong enough, they wouldn't have been eaten by the presence of buyers. Please get that. That is to say that you have a goose in your shop. Please get that. You have a goose in your shop. So when you sell off, let's assume you have 10 cartons. So when you sell off like 4 cartons, what will happen? You will see empty space. When you sell off another carton, what do happen? You will see empty space. If you fail to restock, what will happen? You will lose all. That is how the market works. Do you get that now? That is exactly how market is operating. So this place now, they were selling, they were in, they have a momentum at a point. The market now get to this point and everything changed. The game starts changing. So when you are placing a trade and you notice that this thing opened up at this place, believe me, as you see this thing that opened up in this place, as somebody who like selling, from here you have the opportunity to sell to this place. Then you watch your 5 minutes time frame, 1 minute time frame, every other time frame you are watching, and you are confident enough that this thing is selling to that aspect. Then enter your trade. So that is one of the things you should understand. So if this thing opened up in 1 hour time, everything that must happen within the market in that 1 hour time must happen within this H1. So that's why I want you to understand this, and for you not to be making a kind of mistake you're making. It is the time frame that gives you the condition of the 1 hour of the candles. Please get that into your mind. It is the time frame. So if the market happens to move in this direction, sometimes market to move in this direction, please get this now. Market to move in this direction. Let me remove this so that it will not confuse you. All right. Sometimes you will notice that the market you expected to go sometimes will go in this direction. Watch here. I want to show you something. Do you see this? This is how the market operates. Now, as one, all these things you are seeing are symbols of candlestick movement. All these things are symbols of candlestick movement. So each time you open your trade, the first thing you should do is for you to zoom out. If you zoom out, ask yourself what actually is going on. Now, what is the trend of the market? Another question you should ask yourself is, what time frame can you use to ascertain the accurate time frame that this market, that this thing will use to show you the perfect movement of the market? So if you open your market, you visit your 1 hour time frame. If you visit that, then you will see the structures of the market. Then the first thing you should do is for you to draw your trend lines. If you draw your trend lines, then find out the support and the resistance zone. Find those things. Find out the support and the resistance zone. If you find out, then the next thing you should be looking at for is the pinpoint. What am I talking about? Where is the market possibly going to reverse? Where is this market possibly going to reverse? All right, let's see something. In most markets, we'll often see something like this. You know, sometimes you will see a market like this, then a trader will think that it will continue in this direction, only for that person to see that this market started going up to this angle. Now the question I want to ask you is this: if you are the one trading in this angle, what will be your hope? What will be your confidence? What are you going to be trading from this very angle?